So let's try to understand about the assessment year and the previous year concept. Okay. See here. The concept of the assessment years and the previous year goes something like this. See, first of all, what is meant by financial year? Before let's understanding about PYAY, let's basics of the accounts, that is the financial year. All of us know what is the financial year. Financial year starts from 1st April to 31st March of the next year. Correct? Whatever the financial year which you are looking into, no, just replace the term of the financial year with the previous year for the purpose of taxation. You are finished with the previous year. That is, the financial year as per the accounting terms is treated as the previous year in our income tax terms. That is, Income Tax Act 1961 speaks about this previous year is nothing but the year. For our understanding purpose, it is nothing but the financial year only. 31st March to 1st April to 31st March. That is, which is immediately completed for our exam. We are looking into the completed financial year. The completed financial year is 23-24 for us. That is, the previous year which is applicable for our exam is going to be 23-24, my dear people. Simple. So previous year is nothing but the financial year. Let's try to understand what is this concept of this previous year. See here, if you are earning certain income in 5th May 2023, keeping it in general sense, I am not taking anything complicated or in the future aspect. This detailed revision is only with respect to the going in a sequence only. So my assumption is that you guys have knowledge, that is, you guys have no knowledge with regarding to income tax. This detailed revision is helping you with regarding to moving forward. Okay, simple. Other complicated terms and all I'm not taking. Exception cases and all we are seeing going forward. Okay, 5th May 2023. Now, whatever the income which you earn in this 5th May 2023 is going to make it as taxable first of all. Correct? When you're going to pay the tax, you're not going to pay the tax in 23-24, but you're going to pay the tax in 24-25. Everyone. So, can I say the income in which you earn in previous year, you're going to pay the tax for the same in the next year. So, the income for which you're going to pay the tax is called as previous year. The income in which year you are actually paying the taxes is called as your assessment year. Which year you are going to pay the tax, that is your assessment year. For which income you are going to pay the tax is called as the previous year. Simple. Everyone. Understanding the term of this previous year and the assessment year is very simple, very important, because this goes hand in hand. If I'm speaking somewhere about the previous year 23-24, it is implied that I'm speaking about assessment year 24-25. If I'm speaking about AY 24-25, it is implied that I'm speaking about PY 23-24. Everyone. Simple. Great. We'll move forward. See now, if I'm speaking about this point for that matter, what is meant by assessment year? Assessment year is the money you, which in the year in which you make money is my previous year. The income, this income get taxed in the next year, it is called as assessment year. That is, in a professional language, this means a period of 12 years commencing from 1st April of every year. See, previous year, it is a year in which the income for which it is going to be fixed for that matter. That is what we have seen now. Simple. Clear. Suppose you're starting the business during the mid of the period. That is, you start the business or profession during a financial year, and the period from which the business beginning until 31st March becomes your previous year for the tax period. Let's consider you have started your business on 15th of September 2023. So, what will become your previous year? Your previous year starts from this date and it will end on 31st March 2024. Simple as that. This becomes my PY, and AY will be as usual, it will be 24-25. Everyone, AY will be 24-25. Simple. Now, Fine. Whatever we have understood with respect to PY and AY is easy, clear. Now you can understand. See, there are certain rules where there is an exception. This is a general rule, that is income of the PY is going to be taxed in the assessment year. Correct? Following the previous year. Simple. We have understood that. There are certain exception to this rule. Exception means you're going to make the payment of tax in the PY only. You're not going to wait till AY. See, if the government wants to collect money from you, it needs to wait till AY. In this certain five situations, government doesn't want to wait. Department doesn't want to wait. Department wants to receive the money as soon as you receive the money. You receiving the money, it is income for you, and the government collecting the tax, it is income for them. Simple, clear. No. What are those exceptions? See, all these are very, very logical. Shipping business of a non-resident. People, if you're doing any shipping business for that matter, shipping business of a non-resident, array, that person who is doing the shipping business for that matter, he is coming doing the shipping business in India. He is a non-resident. Before payment of the tax, this fellow will run. Can the department keep a track of those kind of persons and all? It is very difficult. So what they insist is that, array, if you are doing a shipping business if you are doing a shipping business and of a non-resident, do one thing. You have to pay the tax in the year in which you earn. That is in PY you are earning. Pay the tax in the PY only. Don't wait till AY and all. We are not ready to wait. Pay in the PY and then go anywhere you want. Simple. Next. Person leaving India. See, people, just give me a moment. See, person leaving India. With regarding to the person leaving India for that matter, see here, if that fellow is leaving India and if he's leaving India and is going, what does it mean? That fellow is telling Tata goodbye to India and is going. He said what he has done, let's take an example. That fellow has sold some property, got some good capital gains, is taking money and is leaving India. Department is like, "Arey, wait, you're leaving India, no? Not for the purpose of tourism. He's leaving India. His intention is to leave India, tell Tata goodbye to India and go." So, if that fellow's intention is to leave India for that matter, if you pay the tax in the PY. If that fellow once leaves India, can the government hold that person 100%? Can't hold that person. No? So, what they insist is that, "Arey, you're leaving India, okay, fine. Fine, you leave India. We are okay with that. But pay the taxes and then go. Pay the tax in the PY only. Don't wait till AY. Simple. See, AOP, artificial juridical person, etc., forming for a particular event or purpose. Very simple. Yeah. See, this AOP people and two or more people coming together for a common purpose, doing the business, dissolving, taking money, taking their share, and going out. If that is the case, can I say whatever the income which they have earned in that PY, that year only it is getting dissolved? And for your information, AOP for that matter, what we have understood over there, that is in the classes, AOP, that the fellow doesn't have any legal binding. So that fellow waiting till the next period for that matter, that fellow waiting till the next period for that matter, what will happen? Just give me a moment. Okay. That fellow waiting till the next period for that matter, they might not pay the tax only. Chances are there. It is not mandatory, but the chances are there. So it is going to be what? You pay the tax in the PY in which you earn only. Don't worry. Okay. Person likely to transfer property to avoid tax. Arey, if some person is intentionally trying to avoid tax by transferring the property and the department comes to know, 100%, 100% they are going to tell, please pay the tax in time. Clear? Next one is what? Next one is the discontinued business. What is meant by this discontinued business is that, what is meant by this discontinued business is that this what just give me a moment, there's some problem, I guess. Discontinued business. What is the concept with this discontinued business is that, now in 23-24, this fellow, that is the company for that matter, has discontinued. That is, they've done business only for 6 months, 8 months, and they have dropped their business. Arey, why do that company need to wait till the next year to pay the tax? Arey, however, you are dissolving your business, discontinuing business, and going home. Pay the tax and then go home, no? That is, pay the tax in the PY only is what I mean. So these are the 5 points wherein these are the exceptions to that. Clear? Clear? Now, the next point is coming up to the undisclosed source of income. See, first of all, remember this undisclosed source of income comes with the concept of wherein you are not showing your income 100%, or the income which is shown, there is no satisfactory explanation which is given to the AO, assessing officer for that matter. That is going to be basically going to be considered as undisclosed source of income. Why is this dangerous? This is very dangerous because the rate of tax which is applicable for this one is going to be 60% plus 25% plus 4%. 60% is the flat rate, 25% is the surcharge rate, and 4% is the HEC, which is always and always applicable.